Hello everyone, welcome back. Got a really good one for you today. Happy Friday, by the way. Glad you made it. So in today's video, we're just gonna kind of do a weekly recap. What's going on in the news, what the mainstream's saying, my analysis on everything, and then where I think we're going. Then we'll take the weekend off, give people a chance to get caught up, and roll right into next week. So, first of all, I'm inverse Cramer right now, so I'm pretty excited about that. What do I mean? Well, in my predictions video I did a few days ago, where I said high growth tech is almost done selling off, I think we're about there. Cramer just went on TV like yesterday, talking about recession proofing your portfolio, talking about moving to value stocks, which I said that's done. He says recession proof value stocks is the way to go. I'm saying the polar opposite in the stock world. High growth tech, which has been beaten black and blue, I think is about to come back. So I'm officially inverse Cramer. That's a really good sign. I'm also officially inverse Robert Shiller, famous economist. He's the usual suspect when it comes to deflation. So we have all the deflationist, usual suspect players at the table that are saying you need to be in dollars, you need to be long interest rates and bond yields. And I think these people are about to eat some mega doo-doo. Why do I say that? Well, you're seeing inflation destroy everything. Wall Street's getting scared by these CPI prints. If inflation keeps eroding all these companies' profit margins and destroying everything, like creating demand destruction, well, that's going to result in the stock market and Wall Street going down, 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 because stock shares are just pieces of companies, and if these companies aren't healthy, then the stock price just keeps collapsing. But it's much trickier than that. Much trickier than that. Look, one day inflation's good for stocks, the next day inflation's not good for stocks. Have you noticed that? Think about 2020 when the Fed came out and said, we're just about to print unlimited money. What did high growth tech do versus the dollar? High growth tech went straight up and the dollar went straight down. And now it's, inflation's bad. Inflation's bad for stocks. Inflation makes stock prices go higher. I believe that. And I'm going to kind of maybe give you my perspective on it and give you my case for it. So in the 1970s, which I'd say today is the most comparable to, even though there's a lot of things that are different, my gosh. So don't think I'm just being like, everything always stays the same, complex, markets aren't complex adaptive systems, and this is the 1970s and now it's the 2020s and it's same. It's not, but it's quite comparable. So follow me. In 1971, defaulted on the gold standard. This freaked everyone out because the dollar started to go down, 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 and inflation, even in consumer goods, started to get real weird in the 70s. But even though stock prices went up and gold went up and oil went up, there was a recession in 1974. It was quick little blips of deflation. So the stock market might cough up 20, 30, 40%, in 1 year. But what happened by 1975, 6, 7, 8, and 79? Total blow off to the upside in stocks, in gold, in oil. So can inflation throw off a company's profitability? Absolutely, but it's so much more complex than that, because as more and more and more credit finds its way into the system and chases a fixed amount of asset, you see rising prices in assets. So, net, I say inflation makes asset prices go up, even the pieces of companies, and not down. These companies, they have really high PE ratios. They're completely detached from their fundamentals. Check. I don't care because I know any minute now the Federal Reserve has to come back. They have to. This whole, the Fed's just going to keep raising interest rates into a slowing economy? No. Because what you're saying there is the Fed is going to keep raising interest rates, ignore the slowing global economy, and crash their system. And the Fed exists to not crash their system. The Fed exists to negate the business cycle. So will the Fed allow for maybe 20, 30, 40% deflation in the broader indices? Put another way, will the Fed sometimes take air out of the tires like they're doing right now, just, removing the punch bowl and kind of sending the market into a hangover? Yeah, the Fed does that. But what do you think's going to happen if this gets any worse? You think the Fed's just going to sit there and sit there and sit there, and then we're going to go into a 1930s Great Depression deflationary death spiral? No. These institutions exist to negate that and to pretend that that's the boogeyman. So personally, I'm stoked about high growth tech that doesn't pay a dividend at these levels, but I could be wrong. I'm stoked about Bitcoin. I'm stoked about gold. I'm stoked about energy. I'm stoked about stocks in general. I don't like cash. I don't like bonds. I think bond yields and rates are going to either stabilize or go lower. And I think inflation's just going to keep, slamming the CPI, the Consumer Price Index, which came in really hot today at like a whopping 8.6. But here's the other thing about the CPI. That's a poor barometer for measuring inflation because it excludes those pesky volatile food and energy prices. So, and the CPI also doesn't use rents. It uses owner's equivalent rents, which allows them to understate inflation. So you're seeing an 8.6% CPI print. I assure you it's much, much, much higher. But I also assure you this isn't going to destroy Wall Street and asset prices because the Fed will come back. The Fed's feet are taped to the bike on this one, okay? They can't continue to withdraw all this liquidity from the system, jack up interest rates, and then expect the economy to stand on its own 2 feet. And they know that. So the usual deflationist suspects are in the room. They always get really freaked out and say to move to dollars, even when Tesla is at like all-time highs and ARK is at all-time highs and Bitcoin's, in the 60s, they'll tell you cash is the place to be. So it's the usual suspects. They're having their little moment where it's like, see, I told you so. But this is the exact moment when I believe asset prices cry uncle and the Fed comes in and loosens up the monetary spigots again. Will that create more inflation? Yeah, absolutely. That's why I'm bullish on inflation and all these asset prices. So we're waiting for the Fed to come back. When the Fed comes back, everything's going to reverse even harder to the upside. That's the dollar getting weaker. Yes, I understand these stocks are proxies for companies and the companies' profitability is really, really hurting. Like, I totally understand that, but I totally don't care. The beast system will be protected. The Fed and the Treasury are watching the markets. They will protect their benchmarks before they protect consumers at the grocery store. So, now that the inflation genie's out of the bottle, I don't see the Fed trying very hard to run around and put it back in. They would have to go medieval on inflation to make that happen. So I'm leaning kind of going forward. High growth tech starts to really move up. Cramer's wrong. Robert Shiller is wrong. The deflationists are wrong. Bitcoin starts to move back up. Gold starts to move. Well, gold is moving up. Oil keeps moving up. And rates have to overall go lower. Okay, we're not done with rates overall moving. So if mortgage rates start to roll back over here in the next few months, that's going to put upward pressure on home prices. And it's not a good or bad thing because there's, that's its own thing. So I'm not saying good or bad. I'm just saying this is kind of what I see happening. And this is kind of the mechanisms I see at play in the market. So yeah, going forward, I think inflation keeps hitting you at the pump in the grocery store and travel, whatever. There's not really a whole lot the Fed can do about it, even if they say they're going to do something about it. Saying you're going to do something and doing it, those are completely different things. And if you look at the Fed balance sheet and Google it right now, pull up the Fed balance sheet, that thing's going higher. They're saying they're going to roll the whole thing off and go all the way back down. And even if the economy could stand on its own, the Fed could roll its balance sheet even back down to like, $1 trillion or not need to support that market that much. But I see the polar opposite. I see the Fed coming back any minute now and firing up another 5 or 6 trillions and sending their balance sheet to 12 trillion. Bonds and yields, yields and rates stable or lower. And then all these asset prices just keep going back up. So is inflation bad for stocks? Super, super, super debatable. Stock prices actually really like an inflationary environment. If you look at the 1970s, did they have a recession in the 70s? Yeah, but it was so quick. You know, these deflations are just so fast. And when do those reversals happen? If you look at a chart, generally at about the line of a bear market where we are right now. So 20 to 30% off recent highs on all three of your major indices. Fed's got to come back. And if you think the Fed isn't going to protect the market and the financial system and is going to protect the consumers and the dollar, you're wrong. Even though they say they are and the deflationists say they are, the Fed loves high growth tech. Okay, the revolving door with Larry Fink and Jerome Powell and Janet Yellen, they've been saying, if you read between the lines, since 2014, to go as far out on the end of the risk curve as you can, meaning like abandon bonds, abandon rates, abandon yields, abandon fixed income, and just go growth, growth, growth. And they were right, because they kind of told you what to do and then created the policies that created that environment. So look at stock BLK, that's the shadow government in the US. Just maybe consider start shopping around, but not a buy or sell recommendation. We're just hanging out. I don't got a piece of paper. These are just conscious streams and kind of what I see going on. So kind of recap everything, and then I want you guys to have an awesome weekend. Fed knows about inflation. Fed's not going to do anything about inflation as far as helping the consumers in the middle class. Fed hasn't been protecting the markets because they've been letting air out of the tires. This has made Robert Shiller and Cramer say, oh, here comes the recession. I'm saying at that very moment that they're saying, here comes the recession, we go out onto the end of the risk curve, the high growth tech, the stuff that doesn't pay a dividend. We abandon the safe recession-proof value stocks. So we're going to flip the tables on them, but also just, watch, right? I'm telling you, don't trade off this stuff. I'm not a licensed fiduciary, but hey, I think this is a really good opportunity, I think, for me to be contrarian and right. Okay, you got to be contrarian. Well, you got to be contrarian when it comes to especially trading, but just markets in general. But it's being contrarian and right that's really hard. So just being contrarian all the time for the sake of being contrarian, hey, that's probably gonna, that's ultimately gonna backfire in your face. I really do believe that. Lived it. But if you can be contrarian and right, you can railroad these markets and collect a lot of premium. So let's go inverse Cramer and see what happens. Let's go inverse Robert Shiller and see what happens. Let's go hypothetically long the NASDAQ, which is probably like 11.5 right now, 11,500, and let's see what happens. Watch the gold, stackers. Hey, what's up? It's all good. Do your thing with the physical. The Bitcoiners, do your thing. I'm loving the altcoins here too. Even, yeah. Let's just keep going, and let's see what next week brings. But a lot of this inflation too, that's like scaring everyone. The market is like baking it in right now. So, you wait around and you miss the big moves to the upside. So it's tricky, but I could be wrong, right? And we're just gonna have to see. Hope you have a great weekend. I hope this kind of, at least paints a picture for you for where I'm at. And then, hey, take it or leave it, right? Till next time.